You know, if you've seen the classic 1967 movie The Graduate, you probably remember the most famous piece of investment advice ever given.
Oh, absolutely. One word.
The one word, plastics. It was so simple and at the time, profoundly lucrative.
It really was. It felt like the entire future, just encapsulated in a single noun.
But if they were to remake that movie today,
Right.
the advice would have to be two words, quantum computing.
I think you're right. It's a bit heavier, maybe not as simple as plastics, but that's where we're headed.
Absolutely. We are standing at a real technological inflection point. Quantum computing, or QC, is just poised to reshape, well, everything.
Yeah.
Medicine, finance, security.
Everything.
Yeah.
And the window of opportunity for you, the learner, the investor, to get informed and get positioned is right now.
And that's our mission for this deep dive.
Exactly. We've gone through the research, focusing on 3 specific megacap stocks that our sources recommend as really the smartest way to play this very volatile field.
We're going to break down the really complex stuff, the chips, the qubits, all of it, and then get into the strategic reason why these massive companies are the right move.
So let's start with the science, because you can't really invest in the future if you don't understand the engine that's driving it.
And you can't really talk about quantum computing without starting with the company that's been in the race the longest, Alphabet.
Google's parent company, they have been relentless. Google Quantum AI officially got started way back in 2012.
2012, wow.
Yeah, and their mission has always been incredibly ambitious to, and I'm quoting here, build quantum computing for otherwise unsolvable problems. They're all in on one primary path: superconducting quantum computing.
And what we're seeing in the sources is that their approach is just comprehensive. They aren't just fiddling with a few chips here and there.
No, they're building the entire infrastructure from the ground up, and that's critical.
What does that actually mean, superconducting?
It means the hardware has to operate at temperatures colder than deep space. I mean, just a few thousandths of a degree above absolute zero.
Unbelievable.
So Alphabet is covering the whole stack, the processors, of course, but also these huge specialized cooling systems called cryostats.
Cryostats, got it.
And then all the incredibly complex software needed to run these extremely fragile machines.
So that reliance on the cryostats, that's really the biggest strategic challenge for this approach, isn't it?
It is. It's not just about making qubits, it's about keeping them stable in this incredible hostile environment. If you can't maintain that stability, all your calculations just fall apart.
But they've made progress.
Oh, huge progress. Despite the hurdles, they've hit 2 truly historic milestones on their roadmap.
And the first one is what really put them on the map back in 2019.
That's right. The achievement of, quote, quantum supremacy.
Okay, what does that term actually mean?
It means they proved that their quantum computer could solve a very specialized problem in just a few minutes. A problem that would take the world's most powerful classical supercomputers, thousands of years.
So it was the moment it moved from just theory to
demonstrated reality. Yes,
Yeah.
There was the proof of concept.
But the second milestone, that's more recent, and it signals a shift from concept to actual utility. That's what investors should really be watching.
Absolutely. In 2023, their team unveiled the first logical qubit prototype.
A logical qubit.
And it successfully demonstrated quantum error correction. Now, this is massive because quantum computers are inherently fragile. Any little thing, heat, vibration, it creates an error in a physical qubit. The error rates are really high.
Yeah. A logical qubit. It's like using multiple physical qubits to act as one super robust, error-free unit.
That's the perfect way to think about it. It's redundancy built right into the system.
Yeah.
It's the difference between trying to use one glass marble that you keep dropping versus putting 100 of them in a reinforced steel box.
The box is more stable.
Exactly. The logical qubit is much more stable and reliable. And that breakthrough is the essential key to scaling up. Google's really leading the charge there.
Okay, so that sets an incredibly high bar for the tech. Let's pivot now to the second major player. If Alphabet is the deep research pioneer, then Amazon is. Well, it's the 800-pound gorilla of the cloud.
Right, and their strategy is fascinating because it's so pragmatic. It's a dual-pronged approach.
What do you mean by that?
They realized they could profit right now just by being the picks and shovels provider, while at the same time developing their own breakthrough hardware in the background.
The picks and shovels idea is perfect here because most researchers are already interacting with them through Amazon Web Services.
That's their massive advantage. AWS offers something called Amazon Bracket.
Bracket.
It's essentially a quantum cloud computing service. Things like the ultimate virtual quantum lab. Researchers anywhere can access and test hardware from all kinds of providers, not just Amazon's.
So they're making money no matter whose hardware actually wins. They just charge for access.
Exactly.
Yeah.
But like you said, they are not just sitting back and collecting rent. They're developing their own hardware, which brings us to a real aha moment in the research.
Let's hear it.
Well, the announcement was in February of 2025, a new chip called Oscillate. And this chip uses a completely different, really innovative approach to solving that error problem we were just talking about.
And this is where we get these wonderfully named cat qubits.
Yes. It sounds a bit whimsical, but the science is dead serious. The name is a nod to Schrödinger's thought experiment, of course.
Of course. So how do they work?
Unlike the logical qubit, which uses external redundancy, the cat qubit tries to make the qubit inherently more stable from the start. They're built in a way that effectively suppresses certain types of errors.
So instead of needing a huge safety net of, say, a dozen physical qubits to protect one logical one, the cat qubit is already sort of semi-protected.
You got it. And the financial payoff for this is, well, it's staggering.
What are we talking about?
The sources projected that this single innovation could reduce the overall costs of quantum error correction by up to 90%.
90%.
90.
That's not just an improvement, that's a revolution for commercial viability. If you can slash the cost and complexity of just maintaining stability by that much, you accelerate everything.
It goes right back to the idea that the winner in QC might not be the one with the most qubits, but the one who can make their qubits stable, usable, and affordable at scale.
And Amazon's betting on affordability and access through their cloud.
That's the play.
Okay, so we've got Alphabet's speed and raw power, and Amazon's focus on cost reduction and access. Let's get to our third recommendation, Microsoft.
Right. Known for Azure, Windows, Office 365. And like the others, they're investing heavily, but with a very unique and I'd say potentially game-changing technical focus.
Their strategy seems layered. Before we even get to the hardware, they have this Quantum Ready program.
Yeah, that's incredibly strategic. It's part of their Azure cloud platform.
What does it even mean for a business to be quantum ready today? I mean, we're still years away from a commercial machine.
It's all about preparation. See, QC brings two huge things: risk and opportunity. The risk is that current encryption becomes totally obsolete.
The quantum security crisis.
That's the one. So this program helps leaders plan for that while also getting ready to leverage the huge opportunities QC will burn for business transformation. They're making sure their current customer base doesn't get caught flat-footed.
It makes sense. Secure your client base for the future. But their core technical bet is maybe the most radical of all: the topological core architecture.
It is. They're focusing on stability from day one, from the ground up. This architecture uses something called topological superconductors, or topoconductors.
Topoconductors.
Right. So here's an analogy. Imagine a qubit is a delicate piece of string. If you bump it, the information it holds changes. That's a standard qubit, and that's the error problem.
Okay, makes sense.
But now imagine you take that string and you tie it into a complex fixed knot. The shape of that knot is based on topology. You can stretch the string, you can bend it, you can shake it, but the essential properties of that knot, how it's all interwoven, that doesn't change.
So the information is encoded in the structure, not in a single fragile point.
Exactly. The topology provides inherent structural stability against all that environmental noise. It makes error correction so much simpler.
And what are these topoconductors made of?
Well, they're a special type of matter. They don't fall into any of the traditional solid, liquid, or gas states. And Microsoft just announced their first chip using them, the Majorana 1.
So what's the ultimate role here? What is Microsoft betting this radical approach will get them?
Scale. Massive scale. While Google is, celebrating its first few logical qubits, Microsoft believes this topological technology is the key step toward fitting 1 million or more qubits on a single chip.
1 million qubits on one chip.
If they can make the qubit that stable, they don't need all that massive redundancy. It just shrinks the physical space you need. If they hit that mark, it's not just a leap. It's a monumental jump over everybody else.
Okay. Wow. So we've covered 3 completely distinct, incredibly ambitious technological paths.
Right. Alphabet and superconducting, Amazon with the cloud and cat qubits, and Microsoft's big bet on topology.
Which brings us to the crucial investor question. Let's shift our focus completely, away from the lab and onto the balance sheet. Why these 3? What do they have in common that makes them the strategic investment?
Well, the answer is that what they have in common is far more important than their technological differences.
Okay,
First, they are all Magnificent Seven stocks, the biggest, most influential tech companies in the world. So you have a base level of stability right there.
that's a good starting point.
Second, and this is critical for their quantum strategy, every single one of them operates a huge, widely used cloud platform. AWS, Google Cloud, Azure, that's the only real way to monetize this technology in the near term.
And they're
They're all leaders in AI. And QC isn't a standalone field. It's the engine that's going to run the next generation of AI. So they basically control the demand for the product they're building.
But the core investment insight, the really compelling argument from the sources is this. None of these companies are pure play quantum computing companies.
And that lack of specialization is your best defense as an investor.
Explain that. Why would I want to put money into a huge, diversified company where QC is just one small division instead of a startup that lives or dies by its one breakthrough?
Risk mitigation and optionality.
Because right now, no one knows. No one knows if it'll be superconducting or cat qubit or topological or maybe something else entirely like trapped ions.
Exactly. No one knows which will emerge as the definitive scalable winner. It's a multi-billion-dollar technology gamble. Investing in a single pure-play QC stock is incredibly risky. If you bet on one tech and a rival's architecture proves better, your investment could, well, it could just evaporate.
But if you invest in Alphabet, Amazon, or Microsoft,
You're betting on their financial flexibility, their ability to absorb failure, and, more importantly, to acquire success. Think about it. These companies have so much capital that if some small startup makes a game-changing breakthrough, what happens?
Alphabet or Amazon or Microsoft just buys them.
They just acquire them instantly. They don't have to win the scientific race inside their own labs. They just have to be financially positioned to buy the winner, whichever path succeeds.
So for you listening, if you want to profit from the arrival of quantum computing, but you want to do it without the huge speculative risk,
These megacaps are the strategic hedge. You get exposure to all that amazing QC innovation, but it's backed by these massive, diversified, stable cloud revenue streams.
it's the ultimate financial safety net.
It is. It's a bet on the corporate structure that lets them pour billions into R&D in one lab while keeping enough cash on hand to buy success from any other lab in the world.
That really brings a ton of clarity to what is, let's be honest, a very technical and opaque market.
It's all about the strategy behind the science.
Okay, so to recap quickly, we've got Google's quest for supremacy with superconducting and error correction. We have Amazon leveraging AWS to deploy quantum services while developing its cost-reducing cat qubit tech.
And Microsoft making that huge long-term bet on the structural scale that topological conductors could enable.
And the unifying thread here, the thing that ties all these different scientific paths together, is the power and financial stability of that megacat model.
They can hedge their bets, they can absorb R&D losses, and they can ultimately just acquire whatever disruptive breakthrough comes along.
Which brings us to our final provocative thought for you to think about. If the biggest quantum computing successes are ultimately going to be built on these massive acquisitions, a strategy that only these giants can really execute, does that mean the most valuable investment strategy today is actually betting on financial flexibility and market dominance, rather than putting a risky wager on raw scientific innovation?
It's a question of capital structure versus technological singularity. A compelling dynamic. And it proves that sometimes the deepest dives lead you straight to the balance sheet.